Good afternoon. Dan Holland here at Hedgeye, joined by Neil Howe, Managing Director here at Hedgeye. He spearheads our demography sector research, and he also has a terrific piece up on our website right now. You can check it out. It's called Where the Wild Things Aren't, all about millennials gone mild and the investment implications. Neil, thank you so much for joining us.
Great to be here, Dan.
So as you know, we just published your great new piece from you, Where the Wild Things Aren't. Basically a play on your the expression millennials gone mild instead of wild. There's a ton of interesting stuff in that piece you wrote, which is on our website right now. We tweeted it out earlier. Basically, give us a quick rundown, if you don't mind, of what's going on, what's happening here.
Well, this is something that caught our eye a few weeks ago, actually, looking around and noticing that there was a lot of closing of bars and nightclubs in the United States. And we went back and looked and found that indeed we've been about 10,000 bars, or what the census calls drinking places, have closed down across America over the past decade. And in 2014 actually was the steepest decline yet, 6 per day closing across America. And so this is interesting. Even some of the big boys are going down. In 2015, 4 of the 12 big Atlantic City casinos went down, and of course, a lot of drinking goes on there as well. This is not exactly a play on publicly held companies. Most of these are small businesses. Even some of the big nightclubs are owned by groups like the Howe Group, which is in Las Vegas.
Right.
Again, it's a privately held company, but it does have really interesting implications, and it reflects something really interesting about what's changing. What's changing in nightlife in America. And by the way, it's not just America. The Economist had a recent story just in January about the implosion of nightlife throughout Western Europe, particularly England, the Netherlands, Germany, and Northern Italy. The closing of discotheques, the whole scene,
right,
which Gen Xers in the early 90s, made so riotous in Western Europe, is closing down there as well. So we thought this is something really interesting to take a look at.
Absolutely. Why is this? Why is all this happening? What's your takeaway here? What's going on?
Well, our takeaway is very much focused on the rising generation today, which is millennials. You have to remember that the top line for nightclub growth is young adults, coming out, acting wild, and wanting to go into these places and have fun. And here what we see about millennials today is that first of all, they're drinking less. They're not only drinking less, they're drinking less. We know this particularly in very detailed data that we have from Monitoring the Future, which has an enormous sample size of high schools across the country. Grades 8, 10, and 12, the smallest number of young people drinking ever measured. Since we first started doing this in 1976 in American high schools. And then later on, we have pretty accurate data from colleges. We have much less accurate data for young adults. We show it here, but this is a much smaller sample size, so it's probably a little less indicative. But alcohol is going down. Cigarette smoking, which is another thing you do in nightclubs, is going down even more steeply on millennials. And so that's one big change. And of course, the other change is even when they do drink, they're not going out to do it, right?
Sure.
And the reasons why they're not going out is kind of interesting. They're less likely to, in other words, less likely to drink in anonymous settings with random strangers. I guess I can anticipate your next question, Dan. You're asking me, well, why is that?
No, this is all baffling. I mean, this is totally defies my experience growing up. This is like the anti-Animal House generation, it sounds like.
Well, yeah, this is not Animal House. This is not even Wayne's World. This is another group. Here's some reasons. One is obviously the rise of social media and smartphones. Think about it. Millennials no longer have to be with everybody just to be with somebody, right?
Right.
You can arrange where to meet, you can go, you can meet someone on an e-dating site, even on Tinder, you can meet them in a safe, well-lit public place. You don't have to go into a big, wild, dangerous place just to meet someone. This is very different from boomers and Xers in the same phase of life, right?
Right, absolutely.
So you can be much more selective about where you want to be with and with whom. I think another big shift is the demographic weight of the baby boom generation. As they age, they've changed the social mood in a more sedate and conservative direction. When boomers were young, the culture was wild and celebrated wild nightlife. And all generations participated a little bit. There was even a time when even discos were big in America. Let's Europe.
You're dating yourself now with the disco reference.
There we go. It's back in that era. Well, now we have a culture that celebrates, mindfulness and juice diets and, things that more befits a middle age or a generation entering retirement. By the way, I will say among millennials, instead of doing bar crawls in New York, doing juice crawls. Okay, so how's that for a difference? You've got even millennials are taking this on, and that's really my final point.
Right.
That millennials, who some people call Generation Yawn, themselves are manifesting a wide-ranging aversion to personal risk-taking throughout every aspect of their life. And I often remind people of this. This generation has seen a huge decline in personal violence, probably the biggest decline in violence in American history in the last 20 years. 75–80% decline in serious youth crime. We've seen a decline in obviously in drinking, smoking, suicide, self-inflicted accidents. If you go on the CDC website, you can actually look at youth risk surveillance indicators. Almost all of them are down from where they were in the mid 1990s. Buckling your seatbelt, sex in high school. You can go down a long list. Okay. And I think that part of that risk aversion here, we just simply see in not really preferring that kind of risky, edgy activity. And in this respect, I think also it's worth mentioning assertive millennial women are taking the lead here. They're devaluing kind of male-dominated hedonism.
Right.
And millennial men are mostly going along with that. So I think all of this means that you have a different kind of young adult who doesn't mind going to bed early, joking about I'm just going to be a grandpa or grandma this evening, which I hear a lot of millennials talk about. And I'm not going to play hard, work hard and play harder. I'm going to play hard and get to sleep early.
Right. Right.
So something shifting in the millennial world here, and I think that this is indicative.
Quick questions for you, if you don't mind. One question just came in. If you had to identify the two best and two worst stocks that benefit or are at risk because of this millennial shift, what would you say they are?
Well, I think two excellent contrasts would be take a look at the motorcycle market and compare Harley Davidson and Yamaha. Harley Davidson, the average age of a Harley rider keeps rising. They've got a motto, "Screw it, let's ride," which resonates great with boomers. And the millennials themselves aren't buying them. They're going younger and they're going with a much more kind of upbeat, a little bit more conventional brand. I think even a better example is Abercrombie and Fitch. Their stores look like nightclubs, right? They're kind of dark and dangerous. They're exclusive, and they have absolutely tanked. And in fact, A&F is doing everything it can to rid itself of this kind of socially aggressive, exclusive style. Get more into the bright, colorful, inclusive, kind of more upbeat millennial style. And to some extent, they're actually succeeding in getting back to, on par with other brands like Gap, which have actually recovered a little bit earlier and a little bit more strongly than A&F did.
Right. Now, I remember, years ago getting those, the Abercrombie and Fitch catalogs in the mail. I mean, they were, it was very risque. So you're seeing a departure from all of that with the millennial crowd.
Yeah, and there are other aspects as well. You know, we've seen this in sports brands. You know, Nike for Xers used to represent. It was all about wearing black, the swoosh, winning at all costs, just killing yourself to be number one, right?
Right.
And that's really changed. With millennials, it's all about pastel and athleisure and being more cooperative. It's more about color runs and tough mudder. The idea is to participate, not necessarily to win. I think Nike's getting it now. I've actually worked a fair amount with Nike over the years, and they had a real moment of reckoning around 2004 in the Athens Olympics when they first met millennial athletes. It was a very disorienting event for them.
Right.
I think casinos is another interesting area. Casinos going after millennials can't just stress drinking and gambling.
Can I jump in real quick? So the Tough Mudder, I know a little bit about the Tough. So there's no winner in the Tough Mudder. It's just a participation event.
It's a participation event. You do mark your time and everything, but you don't celebrate the number one. You know, and a lot of people in the Tough Mudder runs are spending time helping others get over the events. You know, so it's a little bit more of the, you know, let no one fall behind. A little bit more of the, you know, Marine Corps ethos, right?
Right.
The casinos is interesting because casinos is investing more in skill-based events with kind of social leaderboards, as well as spectacular experiences that kids can, you know, take selfies of and kind of curate on their websites, right? So that's again kind of a shift. Think about it, in a nightclub, you can't take a selfie. It's too dark. What's the purpose of that?
Right.
And I think one last good example is just in the media, where you see the rise of kind of the new nice. And I'm thinking of you know, hosts like Jimmy Fallon and Trevor Noah, who are nice. You know, they don't engage in that kind of edgy, kind of sardonic humor that we associated Xers and you know, Xer and Boomer audiences with.
So Dave Letterman doesn't exist in today's day and age with the millennials. Like he has no career.
Well, yeah. Dave Letterman is certainly an example of what worked with Boomers and X. There's no question about it. When Jimmy Fallon took over the Tonight Show, their average age after about a month sank by about 5 years. And in the media world, that's a tremendous shift. You find a lot of older people that didn't want to watch, but it suddenly had a new connection with younger people. And meanwhile, a lot of the movies now show, you know, boomers behaving badly and so on. But these are kind of broader. These are kind of the broader kind of cultural vibe that's synchronous with what we're seeing. And I think to understand brands is to understand what they mean in the eyes of different generations today.
Right. Neil, thank you so much. It's always so enjoyable to listen to you. We thank you for joining us today. You can also follow Neil on Twitter. His Twitter handle is @HoweGeneration. Follow him there. You can also you know, find his latest research report on Hedgeye.com, which is currently complimentary, but it won't stay that way for long. Thank you so much for joining us, and we'll see you next week.